to talk about volatility in market and trend reversals. So this all ties into the critical nature of the levels that we map each week. So as I'd previously pointed out, we have this support zone that resides between roughly 15 and 1550 on the VIX. Okay. Now, most of you know, but if you don't, the VIX inversely correlates with the S&Ps. So when we see the VIX go up, we'll see the S&Ps go down. Let me actually let's do a side-by-side chart here. Let's go over here. And let me just configure this real quick. So let's go daily. Oops. Yeah, that's fine. Okay, let's actually just put trade trend back up on there. And let's throw on our Bollinger Bands. Okay, and okay. Let's zoom in here. All right, so on the left, we've got our S&P chart. On the right, we've got our VIX chart. And once again, we've got this support level on the VIX between 15 and 1550. Now, is VIX spiked in this recent leg lower? All right, so we see VIX spike, we see S&Ps come down. We broke through support on the S&P. Let me minimize this real quick. Okay, as we came down into support on the S&P, we also came up into resistance on the VIX. So that was a level we had mapped out. So what we want to look for when we use volatility to time trend or market reversals is really two things. So we want to use, number one, support and resistance levels. And again, this is why we map these out each week. Okay, so support and resistance levels. And then second, so we're looking for correlation, right? So when VIX comes down into support and when S&Ps come down into support and VIX goes up into resistance, there's a likely trend reversal that could ensue. We also want to watch for volatility, contraction, and expansion. And I'll explain what that means here. So we're looking for correlated levels between the VIX and the S&P. So S&P into support, VIX into resistance, and specifically to the S&Ps, we want to look for volatility, contraction, expansion. So a simple way to do that is, here are these, is simply to look at the high-low ranges, as we tend to see those change or shift during periods of trend reversals. So like this recent sell-up, as we were running up here and retesting resistance, what did we notice happening? Well, if we look at the high-low ranges on this recent run up, they're beginning to narrow. Okay, so what was previously volatility expansion shifted to volatility contraction. The key here is that we want to find this shift from expansion to contraction near a support or resistance level. So in this case, resistance. All right, so if we see volatility contraction near resistance, and here again, we had both static, where we had our horizontal level, and then dynamic, where we have our center Bollinger Band. And we're getting volatility contraction. All the while, VIX is coming down off resistance. Okay, so VIX began to rotate lower from resistance back on the 19th. So 11 days ago. Okay, that was our clue. And if you look back on the S&P, we got 1, 2, 3, 4, 5, 6, 7, 8, 9. All right, so the 18th. So notice how this gave us some advanced notice of a reversal. So we've got a shift from contraction to expansion, VIX coming down off resistance into support. Now, if we fast forward to today, we've got, again, this support zone that we've come down into. Notice how VIX is, as of today, and this is only one day, so we need to give it a couple more days to really have full confirmation here but we're starting to rotate higher out of this support zone. It's still in its infancy. This is just one day. So what I'll be looking for is VIX to start coming up above the center Bollinger Band, above the 16 level. Above today's high on the VIX. And then S&P simultaneously breaking lows from today. And that will likely precipitate another VIX spike. All right, so this is all about correlation and finding, in the case of a move down in markets, VIX basing at support, and indices like the S&P, volatility contraction at resistance and rotation lower. So see how these things are both lining up. And that's a reliable way to time trend reversals, is to look for that correlation. And again, we're looking for a shift from volatility expansion to volatility contraction. In other words, a narrowing of the high-low range at a key level of support or resistance, and in this case, resistance. All right. Now the VIX is kind of a funny animal. So it's a bit different when you're up at resistance on the VIX. There we tend to see volatility expansion. So it kind of works in the opposite fashion. So a VIX spike into resistance will, and let me just minimize this here, will often result in volatility expansion, but a bearish VIX close. But notice how when the VIX came back down, we got contraction. Okay, so as the VIX is retreating to the downside, and we see volatility contraction, notice the significant change in the high-low range on the daily VIX candles right into the support level. And then today we get expansion. Okay, so if you look at the high-low range from today relative to yesterday, it's wider. It's a bullish candle on the VIX, which again coincides to bearishness in markets, and it's out of a support level. Okay, but we're not completely out of resistance. I mean, you can see, like, if we look at today's highs, they closely coincide with prior VIX highs from February and March. So we really need to break above this 16 level and simultaneously break lows from today for added confirmation of a rotation lower. In addition to looking at those other support levels that we mapped. But just using these in correlation is extremely valuable in terms of timing market reversals. And you can see how this worked out very, very nicely over the past few weeks as we broke through support, saw volatility expansion, came down into the next lower level of support. We had previously mapped all of these out. So if you watched our recorded sessions from prior weeks, we'd mapped out the 49.50 as support. We came right down in, that held. The VIX came down off resistance. So this was 419, same day, right? So notice that here on April 19th, S&Ps came down into the 49.50 half century mark support, while VIX rotated lower off of the 21.50 resistance zone. Okay, so that was, a day's worth of notice. And the confirmation here, and we actually had a bullish price action pivot, was a higher high and higher low on April 22nd's day of trade, and then volatility expansion. It was a little subtle. Notice here that we got contraction. We got a big gap lower, reversal, we get expansion. Okay, so notice how these contraction and expansions are occurring at key turning points in the market. So what we tend to see, and this isn't 100% the case, but most of the time we see volatility contraction at market highs. So this would be like where we might expect to see a bearish reversal. And we tend to see volatility expansion, so wider high-low bullish candles at market lows. So once again, notice how like on Monday's candle, we had volatility contraction at a resistance. Okay. And we had VIX basing at support. And then notice how today we have volatility expansion as we rotate lower. And same goes for the VIX as we rotate higher. Okay, so volatility expansion near market lows. And where this was a slingshot is we had S&Ps come down, breaching the lower 2 standard deviation band. We had volatility expansion. Price turn on the lower band into support. Okay, so all of these things line up. And then on the rebound, we're looking for price to return back up to this level where you see both outer Bollinger Bands diverging. And then line that up with the low of that candle. So that would be pretty much right where I've drawn this line around the 5100 level. Okay, so we've got diverging outer bands. We've got price breaching and then trailing the lower band, coming down into support and returning right back up to that 5100 zone and rotating lower. So this is a completed slingshot at this point. What we look for around this level, so right around this 5100 level, is whether price is going to reverse back down or break higher. Typically, and this is quite reliable, if we break to the upside past this initial level where the slingshot started, we tend to see a significant upside move. If it's rejected, we tend to see a move back down into the band.